All right, everybody, welcome back to Matt Money. We are here with Vince, and Vince is co-streaming on his channel as well. How you doing, Vince?
Yeah, it's pretty good. It's been a good day on the market. I just wish I didn't have Palantir covered calls. Other than that, I'm feeling fantastic.
I have a very serious question for you today, Vince. Are you bullish?
I'm definitely bullish.
Sorry, I was thinking
have,
about that the other day. I was like, Vince is bullish. Oh shit, I didn't even realize that. I forgot about that.
Yeah, I have a bull tattooed on me. I'm so bullish.
I forgot about that. All right, so we do actually have numbers out. So we do have, as expected, and I guess we can kind of look at this together here. We don't have the presentation as of yet, but what we do have is at least the news release. So let me zoom in a little bit for the audience here, and feel free to cut me off. But as expected, 71% year-over-year growth. So we ended up at about 106 million top line, which is 71%, which is really good. Strong demand for our launch services, space systems products, obviously, and ability to execute critical milestone development of the Neutron rocket, which we all know. We saw the hot fire for Archimedes, as Peter sent that news out yesterday. Obviously, they're making good Neutron production and launch infrastructure scaling. Further develop Launch Complex 3, which is on Wallops Island, Virginia. And yeah, as noted, Electron remains a leading small launch vehicle. Successful launches in the quarter, continues demand. They've signed 17 new launches so far this year. And
that's really good.
That's really good. What else? 720 more million in spacecraft under contract, which is good. And yeah, they're getting ready for the Mars missions with the twin Rocket Lab designed satellites. So let's see what other things in here. Successfully launched 50th mission. 50 launches faster than any commercial in history, which is true, even faster than Falcon 9. Signed 17 new launches. Did I miss this first one? Synspective, Kines, the Korea Advanced Institute, KAIST. Archimedes Hotfire. Signed preliminary terms for 49. Oh, that was the federal funding, the $50 million in federal funding for the CHIPS Act. Development and delivery for VARDA, as well as the Space Development Agency and MDA and Globalstar. A new satellite dispenser, which I thought that was pretty cool. We'll probably talk a little bit more about that in depth tomorrow, unless they bring it up in the presentation. So that'll be cool. So next quarter, it looks like slightly down in terms of revenue, but Space Systems up 79 to 84. And that's right. I think they only guided for, in the manifest, only 3 launches in the third quarter. So that looks like it'll impact gross margins a little bit. Basic share is still under 500 million, which is what I'm always looking for.
Adjusted EBITDA of 31 to 33 million. Let me see how that fares.
Yeah, so what are your thoughts so far? Let me see if they have the presentation.
It's a really, really good quarter. I would say, I mean, everything is, the 17 launches in the first, like in Q1 and Q2, that's like, if they keep that pace, that's 34 launches sold per year. Mm-hmm. That's really, really good. What else was there? I'm not so happy with the 3 launches this quarter.
Yeah, I wish it was a little more. Yeah. Considering they're continuing to delay stuff, right? I mean, and we have one this weekend.
Yeah, because you would think that the ones that was delayed from Q1 and Q2, like they would like get delayed into Q3. Yeah. But we know from Peter that it's not them. Like it's the customers who are delaying the launches, not them, right? Yeah. And this is partly what the customers pay for, the flexibility.
Interesting. All right, so the presentation is out. Looks like the agenda is jam-packed, as we always see. Financials is always at the end, but I'm excited to look at highlights, Electron, Neutron, space systems. So there's 4 or 5 different segments before we actually get to outlooks and financials. So let's take a deep dive. So end-to-end space company, as we always kind of knew, but really, I think this is actually kind of cool. They're kind of showing, okay, they built the rockets, they now have the spacecrafts, and now they're getting to the place where they can legitimately be end-to-end. That's pretty badass.
Yeah.
Any thoughts?
It's very
thoughts on that one?
It's very interesting because if you look at ASTS, like that company went to the moon with just the idea of having because I mean they don't have revenue from it. It's like the idea that their satellites will be soon launching, And I was actually wondering, like, okay, but then shouldn't Rocket Lab also get a premium for this? But I understand that Rocket Lab is a bit trickier because on ASTS you know what it is. There is analyst calculations on how much money it will bring, so it's like easy to think with, right? But on Rocket Lab, it's like you don't even know what the service is going to be. You don't know if it's going to bring in 3 billions per year, or is it going to be like Planet Labs and only bring in 300 million per year,
Yeah.
But I still feel that it should get some premium for this because we know that it's coming.
I think so. I mean, I'm still a little flabbergasted at how undervalued a lot of these contracts and stuff are. Like, if you look at Planet Labs and a few of these other companies, I feel like, or at least ASTS, right? I mean, they barely have any revenue, if at all, other than maybe some milestone payments that they might be getting from some of these cell companies. But other than that, yet they're valued at like $5 to $6 billion, triple what Rocket Lab is valued at. So it's definitely an interesting thing that's kind of going on there, and I just don't understand. I mean, considering they're the number 2, right? And I don't know if it's just because Peter isn't as salesman-y as, say, our Silicon Valley counterparts, or you know what I mean, like with what we saw in Astra in Wild Space. I was like very much in touch with the investors, and Peter, not to say he's ignoring the investors, in fact he reaches out to us. So in that respect, he was very much in touch with the retail investor community, but he's more of like a let me show you rather than let me tell you. Yeah. And I think that hampers, I think, a little bit, especially in Wall Street. And Palantir's kind of that way too, right? They're like, look, you could, we're going to show you, we could boost your ego however much you want, but at the end of the day, it doesn't matter unless we actually build on something. So.
Yeah, and look, on the long term, I think that this is a better strategy because, look how it worked out for Palantir. And if Peter wasn't like this, we wouldn't be able to buy Rocket Lab shares for $5. Like, it's an opportunity for us, right? And we just need to be patient, and it will come. Like, at one point, you cannot ignore Rocket Lab anymore, even as an analyst. But I understand how the analysts think, and at this point, I understand. Yeah, like it sort of makes sense why we are where we are.
I mean, the same thing happened with Palantir for a while, right? I mean, nobody really believed in it, and then really got to the point where people truly started to get involved and understand a little bit more, and then you started associating it with other names, right? Like now we're getting associated with Microsoft, and to me, it's not a big deal. To me, it's something that I expected, and I knew that those kind of connections were happening in the background, but to other people, I guess, that don't use the service or they don't necessarily. So it's kind of one of those things where it's not necessarily consumer facing. So it's very difficult for people to kind of grasp onto the brand, kind of like, unlike Tesla, right? Where people can actually drive the cars and they can be involved. And Rocket Lab's a little different in that respect because it's kind of like mostly a business to business sort of interaction, or a business to government sort of interaction. And you don't really get involved unless you're super into space. So anyway, different thoughts. So 106 million in the quarter. I thought that was pretty good. 15% quarter over quarter revenue increase, which was expected mostly from space systems, and they're ramping up of that. 71% year over year. 1.1 billion backlog, which is nice considering we're running at about 100 million or 400 million. 100 million a quarter or 400 million a year, and then increase in launches and growth in space systems business. Mr. Vince.
I'm not so happy about the backlog number. I wanted to see if it increased actually from. Do you have last quarter's number?
I can pull it. Yeah, I can pull it here.
I mean, in any case, it was also like a little bit over 1 billion. So it's even if it's below or over, it's like 0 point some percent higher or lower. And we somehow need to hit 2 billion, right? Like that's what Adam Spy said. And maybe that just makes for a fantastic end of the year for us.
Yeah, so we were at the end of the last quarter, we were at 1.015. So we increased about 42 million. It looks like 52 million. I'm not good with math. You know I'm not good at math. So even though we spent 100 million, or we realized 100 million in revenue, we still were able to grow, I guess, 100 million plus that 40 odd million in the backlog, which I guess is nice. So this is kind of cool. This is a new slide. I haven't seen something like this. Milestone-based billing, which I think is pretty cool, because I think they talked a little bit about this when in the Black Sky earnings, where people were talking about vendor financing and basically being able to kind of spread your payments over time, rather than, because remember when we were chatting before, they're talking about, the 90% upfront sort of payments, or at least 90% of your billing is kind of done prior to the launch. So I think this explains a little bit more about, how they're actually influxing cash before the actual payments, which I think is nice of an explanation. Because I think people were concerned, like, oh, this means that, it's like, yes, they have the cash in hand, which actually is kind of nice, because if you have a big backlog of launches, that means you have more cash on hand that you can then use for working capital and things like that. And then really you realize it really only once you launch, which is kind of nice.
This slide is very nice. I feel like it's after our interview, when we I guess so many people are asking them about the launch delays that they really clarified how it works.
Yeah, that's really useful. That helps.
Yeah,
helps people a lot, I assume. Interesting. Third most frequently launched rocket globally in 2024. That includes China, India. That's crazy.
That's pretty crazy. What is
number 2? I wonder, two? Yeah, I'll be curious. What is number 2?
I thought they were number 2.
They were number 2 in the US. 17 new launches, 141 million in contract value. 100% increase in launch cadence from second half of 23 to the first half of 24. 64% of all non-SpaceX orbital US launches. So basically, if it's not SpaceX, Electron is 2/3. Which is pretty crazy, that's a dominant number too,
Yeah, no, it's just funny, like how you have to, like, SpaceX is such a gorilla that you have to like let's exclude them from the market. And in
a year plagued by launch anomalies, delays across the industry, Electron continues to deliver a trusted. I am curious though, who is number 2? But it's nice to know that, like, I'd rather be number 3 worldwide than number 2 only in the US.
You're
both. Because now you're both. Yeah. Let's see. 9 launches year to date. Back-to-back NASA launches within 11 days. Astroscale, Spire. We're going to have another this weekend. Black Sky is one in the fourth quarter that we're going to have. The strong 10 launch prospective, 4 launches confidential commercial customer. Interesting. I wonder if this is HASTE.
Operator.
Oh, it's a constellation.
Commercial.
And
plus it's a commercial. Like HASTE, I think is a governmental test.
Vertical integration, Rocket Lab separation system to be used. Interesting. I wonder. I don't know who to think that might be. Interesting. Critical enabler to the Department of Defense, I assume, is DoD.
Yeah.
Strong demand with 3 new contracts further. Yes, Victus Hayes, STP S30, a $14 million mission, $14.5 million mission for Space Systems Command. Interesting. I haven't seen that
New
one.
haste contract.
Yeah. Selected to design and build a spacecraft, then launch it within 24 hours notice. Validation of the end. And then, 7 haste missions now on the manifest. I just can't wait, man. I feel like that's going to be a huge pivot point. Like, we've only done 1 haste, and then within the next 6 months, 6 to 8 months, we'll have done 3 more. So and for 3 different clients too. So I'm like, really fingers crossed that it's like, oh shit, like this is another revenue stream, right? That you can really count on. This is an interesting one. Okay. I love this graph so much. Fastest to 50. I'm kind of curious though. So where's 100? 100's not on here. I'll have to build. Everyone else, I guess, never gets to 100. It looks like maybe they do. It's just maybe way further out.
Not in our lifetime, at least.
Yeah.
If it's following.
A lot of these are retired, right? So I think the Minotaur is retired. Pegasus is retired. So I'd be curious. I guess it's really might just be Electron and Falcon 9 that are still.
And Peter Beck said in the Bloomberg interview that they will be the first one to 100 also. And do you see how the Falcon 9 is scaling up?
Yeah.
I mean, that would be very serious if they get there first.
It would be, man. That'd be a huge testament, right? Because that would be on track for the fastest to 100. That would be insanity. And look at this. I love this accuracy. I saw Peter show this the other day, or like a tweet or something like a couple months ago that showed this accuracy. Like, how crazy is that?
Industry margin is 15 kilometers and 8 meters. I mean, that is accurate. I mean, the rocket is traveling at 27,600 kilometers per hour or something like this. Like the 8 meters is like
insane.
It's like a nanosecond or something.
Right. Yeah. And in terms of precision.
Yeah.
Not only the precision, but also the accuracy, right? So the accuracy and then the precision around that is just, it's insane. This is a 100-meter window.
Yeah.
So to be able to put it in there demonstrates why Electron is sought after for the most complex and unique small launch missions. I mean, our rockets actually go into space, and unlike sideways, like some. So some don't even get into space. Electron delivered within 8 meters, man. That's insane. That was the 50th launch. Neutron. Okay, this will be the fun part because everyone's been questioning, right? When's hot fire? When's hot fire? You know, it blew up on the pad. All those rumors and.
It's so funny. I like these guys. They must be watching our weeklies and stuff because it's exactly what like on the Electron business model. They made a slide for that, right? And then also on the Neutron timeline, I feel like we have been talking about this, like how much other rockets. Because Neutron is really, really fast. Even if it's delayed more, it's still really, really fast.
Right. It just doesn't make any sense, man. Oh man. Okay. So rocket development timeline. So you have Electron 2.8 years, Neutron 4.3 years, Falcon's 4.8. New Glen's been at 8 years already. That's the timing. Jeez. Okay. Needs braking. Yeah, I'd agree because really it's only Falcon 9 at the moment. Even the Vulcans takes forever. Ariane 6, they launch pretty frequent, but not nearly to the extent of Falcon 9.
Ariane 6 has only launched once, I think.
That's right. I'm thinking the previous Arians.
Yeah.
But yeah, I mean, it really, I guess the only competitor is Falcon 9 unless New Glenn actually comes up and shows up. But I guess that remains, it's in the same boat as Neutron, right? It hasn't launched yet. So Interesting. Proven track record, market-led design, established infrastructure, critical path to reaching the end-to-end space, launching their own satellites. That's a key piece. I wonder if they're going to say anything with space systems in that section. Capitalize on a $10 billion launch, total addressable market in record time. Which makes sense because not Rocket Lab, SpaceX is I don't know what's specifically launch and what's specifically Starlink, but this year I think they're on track for like $8 billion in revenue. So it makes sense that everybody else all combined is 10. What's up?
A tricky question. How do you think the market reacted to this report?
I don't know. I'm like afraid. I think it's going to be slightly down.
Okay, we're up 6% plus.
Okay. I'm happy. I'm happy with that. What does that mean? $5?
$5.09 last time I checked.
Okay, I'm okay. I'm okay with $5.09 as long as I don't want it mooning. I want it to kind of hang out. I'm not ready. I want to get to 25,000. I'm still not 100% there. I'm like getting comfortable with selling some of my other positions. This is another this hot fire test is another feather in my cap. Now we're at 514. All right, things are going. We're up.
I think that there's something coming here that we have not seen yet, because it was like up at 2%, and then at one point it was like down to 0. I think that's when the algos got to there's less launches, and I think that there's something here that.
Yeah, I see what you're saying. It like went up, and then it went kind of like flatlined, and then the news came out, and I think you might be right. Who knows what it is, but. We're probably like going to stumble on it, and we're all both going to be like, "We're shutting down the stream. We got to go buy. We got to go sell some. We got to go sell some stuff and go buy more." Development status: flight hardware and production and qualifications for 100% of the vehicle. Let's see. Built the machine that builds the machine. Yeah, I remember seeing pictures of some of these things, and it's absolutely insane. Final assembly. Let's see. Archimedes engine testing. Hundreds of critical engine tests completed. So that's what I'm telling people. People are like, "Oh, it's blown up." I'm like, dude, like, you have it on the stand. Like, you know what I mean? Like, why just like light it up and just, especially if you're trying to
I feel that was pure clickbait. I mean, it was so unrealistic to me that the engine would have blown up. That
man. Completed checkout of all test stand systems, including propellant flow tests. That was like the videos I think that we saw like 2 weeks ago of like the propellant flow tests. Turbo pump spun up with timed commands of propellant valves. And ignition tests. Ignition system tested with oxygen flowing. Startup and shutdown. Oxygen-rich pre-burner test to characterize startup and shutdown transients. So it's a lot of cool things. I wonder if they're done though. I'm curious.
They're not done yet because they haven't done the power up. Hot fire completed.
Oh wow! Maybe they'll share a video.
I think this is the one that made the stock go up.
Maybe. Look at that, dude. That's an angry.
That is a fucking sexy looking engine there.
102% throttle. So I guess
you realize and you realize that they were planning to use it on like 10% or something. Like you realize.
I heard it was 50%. Then I've seen 20%. I need to clarify.
But not 100. Like we can ask him, right?
Oh yeah, definitely not 100.
Like my point is like how much margin. Like if it was working at 102%, like how much freaking margin. I think that's the one that is making the stock shoot up. Actually,
what 102% throttle or?
Yeah, because when Peter tweeted the picture, it was like only this low hot fire test.
Yeah,
and basically like
it wasn't this.
And them testing the engine at 102%. It means that their initial calculations of the engine, they were correct, and they're anyways not using it at 102. Like we know that they're using it at 50%, right? So that means that the test is concluded, and you have now an end in sight for the Neutron development. They can start signing contracts. So I think that's the one that is making the stock go up.
Right, 100%, 102% actually. But yeah, take a minute before we dip that back into here. For those of you guys that are, what's that?
5:15 now.
What do you mean 5:15? Oh, the stock price. Okay. For those of you guys that are following on Vince's channel, be sure to follow me, and then the 60 odd of you that are following on my channel. Vince's YouTube and his X is in the description, so be sure you guys do a quick follow there. And then my previous article on Rocket Lab that I wrote on Seeking Alpha, which obviously after this earnings call I need to update. But for those of you guys that are interested in my thesis as to why, it's in that Seeking Alpha article. And if you guys are really curious, DM me. I have if you don't have the paywall, you don't have Seeking Alpha, that's fine. DM me and I'll be more than happy to give you the I have like 4 to 5 articles I can give away a month for people to get behind the paywall. So if you're really interested in reading it, just give me a DM on X and be sure to do that. Number 2 is coming off the line, man. I'm kind of happy to see that because at least the verbiage that I saw, they were talking about long leads, and I wasn't sure if that meant, they were going to
look at the next line.
Yeah, there you go.
Next 5. Wow. Is it 9 engines that they will have, or 7 or 5, or I can't remember how many engines the Neutron is.
The Neutron has. Let's double check. I keep launch Neutron.
I can't believe it, guys. There is an end.
Whoops.
There's a light at the end of the freaking tunnel.
There is, man. Can you believe that? 1,300 kilograms. Let's see. 9 Archimedes.
9. Okay. So they have one on the test end, which we don't know if they maybe will never fly. Second one is coming along, and 5 more in production. So they are still.
If I was Peter, I'd put that first one in my house and just pet it every day.
Put it on his jet ski.
Yeah. Oh man, yeah, like how it was just like, this is the first time I've actually launched a rocket and it wasn't on something. I remember that was a funny part of Wild Wild Space. Cool. So yeah, 9. So I guess each rocket will have 10. So 9 Archimedes and a single Archimedes. I guess different a vacuum Archimedes on the second stage. But I guess that's comparable to what we have on Electron, because Electron's 9 and 1 on the second stage as well. So I guess it's a comparable design in that respect. It's different fuels. Double additive manufacturing capacity for large scale parts. Increased CNC. What's CNC?
It's the machines that cut metals out of.
Got it.
This computer programmed. It's probably better to ask ChatGPT, but
engine production line gearing up from over 500 Rutherford engines flown to date. There you go. That's pretty cool. I wonder if this is the second engine. I guess so. Structure, fairings, flight hardware, stage 1 tank is done, I guess. Cure a full-scale tank components. Stage 2 tank. Stage 2 tank is the one we already blew up, right? The pressure test?
Yeah.
Okay. But I don't think we've done that for stage 1, yeah?
I actually don't know.
And then interstage panels in production.
And maybe the stage 1 is not also as sensitive as stage 2, because
it's in vacuum, I guess, out in space. Yeah.
Yeah. And
that's
I
a good
think
point.
that it needs to be cryogenic, like when you launch, it needs to be more cooled than, because it's like it gets lit after the. Yeah. So I think that the stage 1 is not as sensitive.
That's a good point. Look at that. That tank is massive.
Yeah, my God.
It's crazy because, how wide is this thing? Isn't it supposed to be 7 meters across? So it's 20 feet across. Diameter, 7 meters across. So it's 21. So yeah, I mean, I don't know. And if you look at this, I don't know if there's 5 of these 6 of these?
We are at 521, 9.2% up.
Automated composite production. Yeah, this big ass printer here.
Whoa. That is a good
picture of the team, man. That's a good picture of the team. Look at them at this head. This is where like these are like the spinners, right? Where they the metal on metal.
I think it's the carbon fiber, no? That it's pulling.
Good point. Yes. That looks right.
But it's
these
probably
are all the
biggest
spools.
It's probably the biggest one of its kind. It's crazy.
That's insane.
That is some sexy looking machine.
I don't know why. Yeah, it says right here, automated fiber placement. Thank God you're reading. I'm not. I'm excited. Okay. I'm sorry, guys. I'm excited. LC3. So now I'm kind of curious because we were talking about this the other day, right? Like, which one is the actual pad? Is it? I guess it's this here.
I still have no clue. It's funny. It's the second picture is showing that, but is the I know it's a third, and it's 2 pictures. It's not 1 picture. Okay.
Yeah, this is 2. Yeah. So I guess this is because it looks like where these guys are standing, if I zoom in, is where like the like I feel like the fuel and the flames are gonna fire out of.
Yeah.
And then this is actually gonna be where they launch.
It should be, because it also makes sense like to place the water tower there.
Yeah, water tower, electrical and power equipment. Receive the long lead cryogenic systems, offsite fabrication. Second integration building for Neutron on track for October. The exterior is complete. So I guess the interior is being worked. Hell yeah, man, we're getting there. Space systems. This will be fun. This is one of the Mars. That's the twin Mars.
I think so, yeah.
This is a cool slide. We got to digest this one. So this is the SDA contract, 18 satellites. Oh man, this is a really cool slide. The MDA Global Star. So this is already being shipped out. Varda. So did they launch the second Varda already? And there's no. I know they landed the first one.
Yeah. So there's 2 more coming. Yeah.
There's the Mars Escapade, the ones we just saw on the first slide here.
Yeah. Victus Hayes. This is very good. I must say that they have really upped their investor presentation. Like there is so much more details being given on so because you remember when we were like doing this tinfoil, like trying to figure out what is their backlog, and they're just like laying it out. Like this is it's fantastic.
This is so cool. Yeah, the Viasat. And then you have ETA Space. What's this one? In orbit spacecraft refueling depot. Oh, I wonder this will be cool. This might have something to do with Artemis, maybe. ETA Space fueling. I have to do some research on that one. Yeah, to do some. So, twin NASA satellites for the Mars mission. Yep, 2 tailored satellites design. 3 years from contract award. Solar cells. This is kind of cool. Vertical integration strategy. Satellites include our solar cells, reaction wheels, star tracker, separation systems, radios, and flight software. End to end, maybe. Blue Origin, New Glenn. By the end of the year. On time.
What does it say? Because my picture is in the last line, so I don't see it. Rocket before the Mars transit window closes later this year. Yeah. So if like New Glenn misses the time, then it's like 2 years wait time for the launch.
I guess so. Yeah.
That's pretty crazy.
That would suck.
What would suck more? Waiting 2 years or Blue Glenn missing orbit or blowing up on
Oh man.
I'm very nervous about that launch. I'm very nervous about that launch.
What
the
would
Falcon
be worse? For Rocket Lab, I would say it would be better if it blew up.
Yeah, because then they just get the order again, right?
They get the order again, unfortunately for NASA, but then, fortunate for us. And then second, it would be like, well, then you have 2 or 3 different competitors. You could have the Falcon 9 or New Glenn or Neutron at that point, or who else.
By the way, when is the call starting? Is it starting now in 4 minutes?
Or is 4 minutes. Yeah, let me make sure I had it in my background somewhere.
So somebody in the chat was asking if there's a call today. Of course, there is a call today, and we are going to be live streaming it.
Let me just make sure I pull it over. Okay, I'm listening to it. So we're up at 518 for the stock. You can hear me still, yeah?
Yeah.
Okay, sorry. I just have I'm looking at a presentation. I have the earnings call up, and I just want to make sure you can hear me. Okay. So yeah, this one is a cool one. 49 million, 50 million for the CHIPS Act, going directly to Rocket Lab in New Mexico. That was kind of cool. I know a lot of people in the New Mexico area that were on X, and they were super fired up. Anything about this one, Hot Vince?
No, I zoomed out a bit. I was trying to read the comments. It's pretty tough to follow everything.
It's a lot. Varda, program milestone W2. W3, propulsion avionics decks completed. Systems integration review. W2 scheduled for launch in the coming months, followed by Earth re-entry and landing in Australia. Where did the other one launch? Where did the other one land? I forget. Wasn't it New Mexico?
Utah.
Was it Utah? Okay. It was in the US.
Yeah, it was in the US. Yeah.
That'd be cool. Australia then. Hell yes, dude. Don't tell me. What is this? Okay. Constellation production update. Oh, I got excited. I was like thinking it might have been the R's, right? Like our constellation that they keep talking about. So Scorpius, $515 million prime contract with SDA. Okay. So that's the 18 that we're going to build. So completed successful system requirements, payload. Now they're going to design. But looks like it's on schedule. And then Thunder. This is the MDA contract. So
they really are doing amazing on the investor presentation.
They are.
Here's before it was just like, we have like X amount with a customer, and now it's like they're giving the mission names, the logos, it's like so easy to follow what they're doing.
So here is the satellite dispenser. Hold on, let me share this really quick. Let me know if you can hear the background music.
Yeah.
You can? Okay.
Yeah.
I just want to make sure that I didn't have to adjust anything. I could just switch right over. So
some people are wondering. So the minute the call starts, we are switching over. So it's just 100%. There's no point in listening to the music, and we're not done with the slides yet.
Yeah. Advanced satellite dispenser. That was kind of cool. They was this 2 days ago that they posted this, or was it yesterday? I forget. It was rather recent.
Yeah, very recent.
What's this? Growth strategy and appetite supports our vision to be the end-to-end space company. Customer, I guess this is all the different things that they provide, right? Separation systems, satellites, reaction wheels, solar arrays, trackers, software. Oh.
Standing by. My name is Regina, and I will be your conference operator
Let
today.
me know if that's too loud.
At this time, I would like to welcome everyone to the Rocket Lab second quarter 2024 financial results update and conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star, then the number 1 on your telephone keypad. If you would like to withdraw your question, press star 1 again. I would now like to turn the conference over to Morgan Connaughton, Vice President of Communications at Rocket Lab. Please go ahead.
She's our lady.
Thank
you. Arranging the interview.
Hello and welcome to today's conference call to discuss Rocket Lab's second quarter 2024 financial results. Before we begin the Well, I would like to remind you that our remarks may contain forward-looking statements that relate to the future performance of the company, and these statements are intended to qualify for the safe harbor protection from liability established by the Private Securities Litigation Reform Act. Any such statements are not guarantees of future performance, and factors that could influence our results are highlighted in today's press release, and others are contained in our filings with the Securities and Exchange Commission. Such statements are based upon information available to the company as of the date hereof and subject to change for future developments. Except as required by law, the company does not undertake any obligation to update these statements. Our remarks and press release today also contain non-GAAP financial measures within the meaning of Regulation G enacted by the SEC. Included in such release and our supplemental materials.
Oh, now it stopped. Matt, we lost the stream.
This call is also being webcast with a supporting presentation, and replay of a copy of the presentation will be available on our website. Today's speakers are our Rocket Lab Founder and Chief Executive Officer, Sir Peter Beck, as well as Chief Financial Officer, Adam Spice. They will be discussing key business highlights, as well as updates on our Electron, Neutron, and Space Systems programs. We will discuss financial highlights and outlook before we finish by taking questions. So with that, let me turn the call over to Sir Peter.
Thanks very much, Morgan, and thank you all for joining us today. We've delivered an exceptionally strong second quarter this year, and I'm looking forward to taking you through all of the highlights and achievements. But before we get there, I wanted to spend some time talking about who we are today, where Rocket Lab is headed in the future, and the very deliberate and strategic steps we're taking to get there. One of the common misconceptions we've faced is that Rocket Lab is a launch company. Yes, launch is something that we're an industry leader in, and of course, rocket being in the name doesn't help, but it's just part of what we do. I'd like to look at this in 3 clear steps. First, the ride. To do important things in space, you first have to get there. We've solved this with small launch with Electron, and we're breaking the medium launch monopoly with Neutron. Next, the tools to do the things in space once you get there. This is spacecraft, the critical components that make them function, the software, the ground systems, and all the other pieces that make missions possible in orbit. We're reliably delivering this for commercial government and customers today. With the first 2 comfortably under our belt, our future and the whole reason for going to space is in the first place, the data and the services that spacecraft provide. It's the most valuable part of the supply chain. Demand for it is growing worldwide, and it's what will deliver long-term recurring revenue and incremental value for shareholders. By owning launch and spacecraft, we're at a distinct advantage when it comes to establishing our own space capabilities or constellations. We can build and launch our own spacecraft at cost, and we don't have to wait in line for limited launch capacity. We completely avoid the pain point that most constellation operators face, being at the mercy of suppliers on cost and schedule, often causing deeply disruptive delays and bringing capability online at scale. But that constellation or capability is not quite ready yet for us to disclose. But this overall company vision is useful to bear in mind when reviewing Rocket Lab's achievements in this quarter, in the months, and the years ahead. So with that, let me move on to more specifics for the quarter. Q2 was a huge quarter for Rocket Lab in a lot of ways, but especially in terms of revenue. For the first time, Rocket Lab revenue ticked past $100 million in the quarter. Revenue ultimately came at $106 million for Q2, which is a company record. We also achieved a 15% quarter-on-quarter increase and a whopping 71% year-on-year increase. This result demonstrates the continued strength of our end-to-end space company strategy in offering diversified products and services, since the growth is driven by an increase in launches on last year, as well as significant growth in our space systems business. As of Q2 close, our backlog sits at over $1 billion. Now on to Electron, some Electron-specific updates. Before I get into some more Electron achievements in the quarter, it's worth spending a moment going back to basics on the Electron business model. I raise this because the most common metric we get held to is number of launches per quarter and the resulting point-in-time revenue recognition. Revenue recognition is guided by well-established GAAP principles, but can at times fail to reflect the underlying strength in our business, given the constructive cash flow nature of the launch business, where we collect cash well in advance of revenue recognition. Electron delivers what rideshares and other rockets can't. It's a dedicated launch service tailored to each customer's specific needs. What that means in practice is customers get to choose and change their launch date. They can choose their launch site and precisely where they want to be deployed in orbit, and they can they can launch on incredibly short notice. We've demonstrated getting someone from contract signing to orbit in less than 8 weeks. If you're booked on a large rideshare or a bunch of other spacecraft, you simply don't get that flexibility, and you certainly can't expect to get a dedicated ride on a large rocket or a new entrance vehicle in just weeks' notice. This flexibility does make it challenging to predict with high certainty exactly how many launches we'll do each year and exactly where they'll land in each quarter. That's not unexpected, rather it's baked into our model and what sets us apart. Now, fortunately, the surface level volatility represented by GAAP launch revenue recognition is disconnected from the underlying cash flow generation, in so much as we collect the vast majority of cash from our launch customers before launch day. So if they shift out by a few days, weeks, or even months, it makes a negligible difference. On this side, you can see an example of our billing cycle for Electron. We typically do it one or two ways: time-based billing or milestone-based. Time-based is most used for our customers booked a year or more in advance of launch. And as you will see, we bill 10% on contract signing, then further installments until we get to the final 10%, which is payable on launch day as soon as we ignite the engines. Milestone-based is more used for our customers who come to us with their hair on fire, say L-3 months. Once again, we'll take a 10% on signing, and then we move swiftly through the key milestones like spacecraft fit checks and readiness reviews, and then we collect the remaining installments until, again, we charge the final 10% when we ignite the engines. So as you can see, if a customer requires a launch date that pushes into the next quarter, we've likely already collected up to 90% of the contract value. We just don't recognize the revenue until launch day for accounting practices purposes. Okay, a quick overview of some Electron achievements. We've signed 17 new Electron launch contracts year to date with a total contract value of $141 million. We also reached an exciting new place in the global launch rankings. Electron is now the third most frequently launched rocket globally, behind only Falcon 9 and the Chinese Long March. For a rocket that has only been flying for 7 years, this is a monumental achievement and really highlights Electron's significance as a proven, sought-after capability. We've achieved a 100% increase in launch rate for the first half of this year as compared with the first half of 2023. Doubling rocket production and launch cadence in this year is far from the norm and really sets our team apart. As of today, Electron counts for 64% of all non-SpaceX US launches in 2024 so far. This really shows what an impact Electron has had on the industry and highlights just how constrained customers are right now with respect to launch options. And of course, in a year plagued by launch anomalies and delays worldwide, Electron has continued to deliver trusted and reliable access to space with mission success throughout the year for all of our customers. Now, this approach has been a successful one for Electron, retaining its title of the most active small rocket globally, and now, of course, third most frequently launched and flown rocket this year. I won't go into the specifics of all 9 launches we've completed this year to date, but if there's something that I'd like you to take away from looking at all of these missions, is just how complex and tailored and customer-centric they are. We're taking dedicated missions 11 days apart to place climate change monitoring constellation in precise locations to monitor the poles, a rideshare mission that developed deployed two different customer satellites to entirely different orbits and altitudes on the same launch, swapped a customer mission out with the next one in queue within 2 weeks when a customer required a later launch date. All of this is exactly why customers choose Electron. It delivers a flexible service that small sats have never had before. Now onto contract wins. It was a few big months with the commercial sales team with a 10 launch deal signed with Synspective, a Japanese Earth observation constellation operator. We've been the sole launch provider for Synspective to date with 5 successful missions, which has been a huge honor. We have also signed a 4-launch deal with another commercial constellation operator who has asked to remain confidential at this time. Electron also continues to be a critical enabler to the Department of Defense. We recently signed 3 new launch deals that further strengthen our position as a trusted partner across launch and space systems. Those contracts include being selected by the Space Force Space Systems Command to demonstrate an end-to-end space mission. This means Rocket Lab will design, build a spacecraft and launch it and operate it on short notice. This is a clear validation of our model as an end-to-end space company. We were also awarded the STP-S30 launch contract, a $14.5 million mission for the Space Force. And last but not least, HASTE continues to be a sought-after capability with another hypersonic suborbital mission sold. We're immensely proud to have taken a proven product in Electron and adapted it into a new use case, unlocking hypersonic test launch capability for the DoD, helping open up the bottleneck that has existed for so long thanks to the limited availability of wind tunnels and test flight opportunities. In the second quarter, we reached a significant company milestone, but also set a record for the wider launch industry when we launched our 50th Electron mission. We reached this milestone faster than any other commercially developed rocket in history, and we're on track to be the fastest to 100 also. This really just demonstrates our team's ability to execute in record time. We also demonstrated a pretty unique ability on our 50th mission, which was deploying a customer spacecraft within 8 meters of the target. Now, for context, the general accepted industry tolerance is 1,500 meters or 15 kilometers. So to deploy the spacecraft within single-digit meters, not kilometers, is a real differentiator. Here's why that matters. It makes Electron the clear launch vehicle of choice for some really complex missions and unique capabilities that are increasingly sought after, like rendezvous and proximity operations, constellation replenishment, and customized orbits. Right, moving on from small launch into updates on the Neutron development.
Let's go, baby.
Our Neutron plans to compete and why we need to invest in a medium launch vehicle. So I'm going to go back to a little bit of 101 here. There is a practical monopoly in medium launch right now. There's no doubt about that. Demand is strong and growing for launch capability, particularly in the constellation space, with more than 10,000 satellites needing launch by the end of the decade. And that's viewed by many as a pretty conservative projection. Neutron is best placed to be the rocket that disrupts this monopoly. We have a proven track record of building and launching a reliable vehicle that became a market leader. Through this experience, we've been able to work incredibly closely with customers to design a new rocket that meets their needs, resulting in a customer-led design. And we're on track to bring that to market at an incredibly rapid timeline. Across all of our launch and space systems businesses to date, we've astutely assessed demand and opportunities and accurately allocated investment and effort where it makes the most business sense. And that has produced undeniable successful results, and Neutron will be no different. Now, on to overall Neutron development progress, and I'm pleased to confirm we've largely progressed past the design phase and we've moved swiftly into production and qualification of flight hardware for 100% of the vehicle.
Stock at 5.
Flight articles now coming together. We're on track to launch. We're on track to first launch for mid next year. I've said this before, but it's a key point that I think a lot of people tend to miss if they're not familiar with the launch vehicle development programs. Developing a rocket is certainly a big piece of work, but it's only about 1/3 of what you actually need to do. The remainder is launch and production infrastructure. That's the pad, the test cells, the production lines, the factories, and all of the processes and procedures to support them. A lot of organizations will focus their attention on their first rocket, but we knew that it would be very important to build up all the infrastructure and support to support production, test, and launch in the long term, so that's what we've done in parallel. I'm really proud of the speed and progress that the team has achieved with Neutron so far in an incredibly short time frame, especially in the update I'm about to share next. Okay, the update you've all been waiting for, the Archimedes engine test campaign. As we've said before, propulsion is always a long pole in the tent when it comes to developing a rocket, but thanks to having successfully designed, flown, and built more than 500 Rutherford engines, we have a pretty good chunk of experience how to do this. We use this to fast-track Archimedes development, and this has certainly paid off. We also made a very conscious and strategic decision right from the outset to design a flight engine and put something on the engine test stand that was designed to be flight ready. It's fairly common to see downscaled engines or early-stage prototypes used for a couple of years before companies actually move into putting something on the stand that could fly. But we didn't do that. In the past couple of months, we put Archimedes through hundreds of tests to validate the design, including spin primes, ignition tests, as well as understanding all the startup and shutdown transients. All of that work culminated recently in a successful Archimedes hot fire. We started off with a series of low-power hot fires with great results. then cranked it up to put the engine through its paces. We've now reached main stage hot fire at 102% power. Now, taking a new staged combustion liquid rocket engine from clean sheet design to hot fire in a flight configuration in just a couple of years is really industry-leading stuff. From here, it's about dialing the engine in, building a bunch more of them, and getting them rolling off the production line. Now, the team has been pushing hard to get the first flight articles through qualification, but like we've always said with Electron, bringing your first rocket is hard. Building your first rocket is hard, but building the 10th or the 50th is even harder. That's why we know it's just as important to build the machine behind the rocket and set it up for scale from day one. The next Archimedes engine is coming off the production line right now, and while the assembly line for many more is also established. Meanwhile, we've scaled avionics production line to support both Electron and Neutron, and all things that make it easier to roll into a launch cadence after Flight 1. While the propulsion team has been kicking goals, the composite team has been moving at pace too. As you can see here, we have flight hardware in production, including the fairing panels for Neutron's fixed fairing. Remember, this fairing is pretty unique in that it remains attached to Neutron throughout the launch and landing, enabling us to reuse it across multiple missions. Meanwhile, we have flight hardware in production for all other Neutron composite structures, including Stage 1 and Stage 2 tanks and the interstage. Since picture paints 1,000 words, here's a quick look at some of the composite production going on behind the scenes to bring Neutron to life. The progress in composites production is just about to accelerate even faster with the installation of our automated fiber placement machine in Middle River, Baltimore. Establishing this capacity and capability in parallel to manual layup of Neutron structures enables us to rapidly scale up production for the first flight and full operational cadence to follow. The custom-built 90-ton machine will automate the production of all large composite Neutron structures, including the panels that make up the 91-foot interstage and fairing, as well as the first and second stages. This machine is one of the largest of its kind in the world and will allow us to save thousands of hours on Stage 1 alone compared with hand labor. Speaking of infrastructure, progress is coming along nicely at Launch Complex 3, Virginia, with fluid systems installation underway, and we've started receiving some of the critical long lead items like cryogenic systems and tanks. As you can see from the photo on the screen, we've poured tons of concrete into Neutron's pad and ready to receive the launch mount. This is a huge piece of infrastructure and a big milestone to tick off for the path to first flight. Just 10 minutes down the road from the pad is a Neutron assembly and integration facility where Neutron will undergo the final assembly before transportation to the pad. Construction of this is progressing well and on track to receive the first Neutron early next year, ahead of launch. Okay, that wraps up launch. On to the other half of our business now, space systems. Before I dig into the achievements on specific space systems items, I thought it worth a quick reminder of the scale of the programs we have underway. Right now, we have more than $720 million worth of spacecraft on contract and in development, including constellations for the Space Development Agency, Globalstar, as well as bespoke spacecraft for NASA, the DoD, and commercial customers. On any given day, the team is working through design reviews, qualification campaigns, analysis, and production for these programs. In many cases, this work isn't very visible because the hardware build only comes at the very end, and in some cases, our customers request confidentiality, so we can't share images or too much detail in progress. What I will say is our team has earned a reputation for delivering high-quality spacecraft on rapid timelines, and these programs are tracking no differently. Okay, on to the more granular detail. We had a huge milestone recently by completing production and test of 2 identical spacecraft for the NASA Mars mission. It's not uncommon for an interplanetary mission to take a decade to go from design to flight ready. So to design, build, and test not 1 but 2 Mars spacecraft in around 3 years is pretty impressive. Once again, it has been made possible in part by a vertical integration strategy, which removes heavy reliance on suppliers, since we produce many components in-house, enabling us to control schedule and costs. And in the case of Escapade, the spacecraft featured Rocket Lab solar cells, reaction wheels, star tracker, separation systems, radio, flight software, structures, and on it goes. The twin spacecraft are now packed up for shipping out to the Cape and ready for launch during the up-and-coming Mars transit window, which extends through October. Over to Albuquerque now, where we've signed preliminary terms for $49.4 million in federal, state, and local funding, including a portion under the CHIPS Act. The funding will enable us to expand production of our solar cells, which are important components for national defense and security satellites. We expect to create around 100 new manufacturing jobs as a direct result of this funding and expansion it enables. Another pair of spacecraft we have rolling down the production line are the next two set of satellites for Varda Space Industries. These Pioneer-class satellites host Varda's in-space manufacturing capsules, which enable the production of pharmaceuticals and other products that benefit from low-gravity environments. We successfully operated one of these spacecraft for Varda last year, successfully setting it onto a course for re-entry and landing it in the Utah desert in February this year. The spacecraft is nearing completion and preparing for launch in the coming months, with a third following not far behind. Now on to Constellation spacecraft in development at the moment. Recently, we completed a successful systems requirements review for our $500 million prime contract with SDA to design and build 18 Tranche 2 transport layer beta satellites. From here, we'll move into preliminary design review before hardware starts to take shape in clean rooms. These spacecraft are scheduled to launch in 2027, so we're on track and kicking some of these critical design milestones off early in the program. Our 17 spacecraft Thunder constellation for MDA and Globalstar, we've completed integration readiness review and hardware is in production, including the first delivery of a full flat sat to the customer. This program is moving at pace, with spacecraft scheduled for completion and launch by the end of 2025. Our spacecraft programs tend to get the most of the attention in the space systems, but our merchant components business continues to kick goals too, including when it comes to innovating new products. At the SmallSat conference in Utah this week, the team introduced a new advanced satellite dispenser, giving customers more choice for versatile and reliable spacecraft deployment. The ASD builds on the 11-year heritage of the containerized satellite dispenser, which has successfully deployed more than 60 satellites. If I labor on about the achievements across our other components businesses, we'll be here all evening, so I'll try and keep it brief. Now, to round out our business updates, I just want to provide a quick update on our M&A strategy. We've had the privilege of being a launch provider, spacecraft developer, and component supplier to scores of companies and organizations across the global space industry. Increasingly, they want complete mission solutions, and a mixed approach of organic and development and M&A aims to serve this. Right now, we're managing a robust pipeline of targets while being selective and strategic about what we want to bring into our suite of capabilities. The focus is on targets that would fill gaps in our already extensive suite of solutions, while also enabling meaningful revenue scale and profit. We look forward to sharing more on this in due course. And last but not least, before we move into the financial highlights, I wanted to share some news about a documentary that recently came out which covers Rocket Lab in a way that many people may not have seen before. Wild Wild Space was released on HBO Max just a few weeks ago. It's a film version of the New York Times best-selling book When the Heavens Went on Sale by Ashley Vance, and it's directed by Academy Award-winning director Ross Kaufman. If you're interested in the history of Rocket Lab and how we got to where we are today and some insight into what drives us, this is a great place to start. Highly recommended if you go and check it out on HBO. That wraps up the top line business achievements. So with that, I'll hand it over to Adam to discuss our financial highlights and outlook.
Great. Thanks, Pete. Second quarter 2024 revenue was $106 million. Which was consistent with our prior guidance range and reflects significant year-on-year growth of 71% and sequential growth of 15%, driven by strong contribution from both business segments, led by Space Systems. Our Launch Services segment delivered revenue of $29.4 million, slightly above our guidance of $28 to $29 million. Our current backlog continues to support our current year target average revenue per launch of $7.5 million, with some quarterly variability tied to volume purchase discounts, launch location, and mission assurance requirements. Our Space Systems segment delivered $77 million in the quarter, again, in line with our prior guidance range of $77 to $81 million, reflecting sequential growth of over 28%, driven primarily by growth in our SDA and MDA contracts revenue. Now turning to gross margin. GAAP gross margin for the second quarter was 25.6%, in line with our prior guidance range of 24 to 26%. Non-GAAP gross margin for the second quarter was 30.7%, which was also in line with our prior guidance range of 30 to 32%. Relatedly, we ended Q2 with production-related headcount of 914, up 42 from the prior quarter. Turning to backlog, we ended Q2 2024 with $1.07 billion of total backlog, with launch backlog of $294 million and space systems backlog of $772.6 million. Relative to Q1 2024, total backlog was up 5% sequentially, or $51 million, despite a $106 million revenue quarter, as strong bookings continued in our launch and space systems businesses. For launch, backlog was up 36% sequentially, or $78.3 million, primarily due to the 10 launch agreement with Synspective that Pete mentioned earlier. We continue to cultivate a healthy pipeline, including multi-launch deals and large satellite manufacturing contracts that can create lumpiness in our backlog growth, given the size and complexity of these opportunities. We expect approximately 44% of current backlog to be recognized as revenues within 12 months. Turning to operating expenses. GAAP operating expenses for the second quarter of 2024 were $70.4 million, up $3.2 million sequentially, but below the low end of our guidance range of $74 to $76 million. Non-GAAP operating expenses for the second quarter were $58.5 million, up $2.2 million sequentially, which is also below the low end of our guidance range of $62 to $64 million. The sequential increases in both GAAP and non-GAAP operating expenses were primarily driven by continued growth in headcount and prototype spending to support our Neutron development program, related infrastructure IT support for Neutron, and our 18-satellite SDA contract, and a step-up related to our annual merit cycle. In R&D specifically, GAAP expenses were up $1.4 million quarter-on-quarter due to Neutron prototyping, materials, headcount growth, and related merit increases. Non-GAAP R&D expenses were up $400,000 quarter-on-quarter, driven similarly to the GAAP expenses. Q2 ending R&D headcount was 673, representing an increase of 48 from the prior quarter. In SG&A, GAAP expenses increased $1.8 million quarter-on-quarter, largely due to an increase in staff costs following our annual merit cycle. Non-GAAP SG&A expenses increased by $1.7 million, driven similarly to GAAP SG&A expenses. And Q2 ending SG&A headcount was 273, representing an increase of 10 from the prior quarter. In summary, total second quarter headcount was 1,860, up 100 heads from the prior quarter. Turning to cash. Purchases of property, equipment, and capitalized software licenses was $15.3 million in the second quarter of 2024, a decrease of $3.8 million from $19.2 million in the first quarter of 2024. We continue our investment in Neutron research, testing, and production infrastructure projects, along with the expansion of our satellite production and space solar solutions capacity, and we do expect our capital expenditures to increase in the second half of the year. Cash consumed from operations was $13 million in the second quarter of 2024, compared to $2.6 million in the first quarter of 2024. The sequential increase of $10.4 million was driven primarily by changes in working capital related to the accounts receivables owing to the space systems milestone payments and the deposit owed on our 10-launch agreement with Synspective signed late in Q2. Overall, non-GAAP free cash flow, defined as GAAP operating cash flow reduced by purchases of property, equipment, and capitalized software in the second quarter of 2024, was a use of $28.3 million compared to $21.8 million in the first quarter of 2024. Our milestone cash collections have been strong in the first half of 2024, and we are ahead of our targeted cash consumption run rate for the year, but we do expect a pickup in cash consumption in the second half, owing to an expected increase in Neutron CapEx and lumpiness in large space systems milestone payment collections. The ending balance of cash, cash equivalents, restricted cash, and marketable securities was $546.8 million as of the end of the second quarter of 2024. We exit Q2 in a strong position to execute on our organic expansion initiatives, as well as inorganic options to further vertically integrate our supply chain with critical capabilities and expand our addressable market, consistent with what we've done successfully in the past. Adjusted EBITDA loss of $21.2 million in Q2 improved slightly by $500,000 from a loss of $21.7 million in Q1, as the benefit of strong revenue growth was largely offset by increased spending, primarily related to Neutron development. With that, let's turn to our guidance for the third quarter of 2024. We expect revenue in the third quarter to range between $100 and $105 million. This range reflects $79 to $84 million of contribution from Space Systems and approximately $21 million from Launch Services. We expect third quarter GAAP gross margin to range between 25 to 27% and non-GAAP gross margin to range between 30 to 32%. These forecasted GAAP and non-GAAP gross margins reflect improved mix within our Space Systems segment in favor of components and subsystems, offset by the impact of lower fixed Launch Services cost absorption. We expect third quarter GAAP operating expenses to range between $80 million and $82 million, and non-GAAP operating expenses to range between $69 and $71 million. The quarter-on-quarter increases are driven primarily by continued Neutron investment into staff costs, prototyping, and materials. We expect third quarter GAAP and non-GAAP net interest expense to be $1 million. We expect second quarter adjusted EBITDA loss to range between $31 and $33 million, and basic shares outstanding to be approximately 498 million shares. Despite Q3's modest revenue step back, we expect a market resumption in growth across both segments of our businesses as we exit the year. And with that, I'd like to hand the call over to the operator for questions.
At this time, I'd like to remind everyone, in order to ask a question, press star 1 on your telephone keypad. Our first question will come from the line of Edison Yu with Deutsche Bank. Please go ahead.
Hey, good afternoon. Thank you for taking our questions and all the progress. First one on Neutron. Obviously, you've made a lot of progress. You got the hot fire test. What should we look for as the next big milestones as we think about the first launch in the next year?
Yeah, hey, Edison. So, as we've always kind of pointed out, I mean, the things to watch are infrastructure build. So the launch pad taking shape and becoming ready to receive a rocket. Keep a lookout for tanks and large structures. And, where we're at right now is we're in the qualification phase. So, we're starting to prepare for the really big tests like full-scale stage separation test, full-scale fairing openings, landing lead deployments, and all those kinds of things. So we'll provide a pretty healthy update of all those achievements as they come along. But that's kind of the cycle we're in. Is kind of like I said on the call, is design is done, and every component in the rocket is either in production or some form of qualification test.
Gotcha. And then kind of more of a financial one on Neutron. So, we were looking at the cost of several rocket programs. You may have seen this, analysis. Typically, they cost many times more than what you're allocating for Neutron. What do you think that you guys are doing differently relative to some of these other programs, whether it's legacy or startups, that's enabling you to actually develop such a robust rocket at a much lower program cost?
Yeah, well, I think firstly, that it needs to be backed up by data, and fortunately that analysis did. If you look at the cost and time that it took us to develop Electron, you can see, as you point out, we can do these things at a very fast time and a very low cost. And I guess that comes down to our development approach. And even if you just look at the example of the Archimedes engine, as I mentioned in the call, what a lot of folks do is they'll put together, various subscale tests or boilerplate engines that have lots of, industrial valves bolted to them and whatnot. But, especially now that we've been around the block a few times, we're able to confidently build, an entirely flight-ready engine, put it on the stand, and it works. So, it comes down to just the experience of the team and also a development approach. We like to fail fast, but not at the system level. We'll fail quickly at the component level, but by the time things get built up into complete systems, we kind of expect them to work. and it's just the way that we've always been. It's the Rocket Lab magic, if you will, and we've right throughout the history of the company, we've always managed to develop these systems at a speed and a cost that pretty much others can't.
Totally. And if I could just sneak in one more financial one, I think the implied 3Q guide is 3 launches. Do we have any updated thoughts on what we could do for the full year for Electron?
Yeah, I mean it's really difficult to predict as you see, launches move around all the time, and as we tried to explain in the call, that's kind of the value proposition for the business. We internally here we worry less about that, as we kind of pointed out, that the majority of the cash is collected through that billing cycle. But launches move around tremendously, and I guess we're trying to kind of provide that color for folks, so that they can see how the business really operates.
Great, thank you.
Our next question will come from the line of Eric Rasmussen with Stifel. Please go ahead.
Yeah, thanks for taking the questions, and appreciate all the detail. There's a lot there to unpack. But maybe just to piggyback off that question, I realize that launches are always tough to sort of predict. I know the manifest seems like it's filling up each quarter, but it's always sort of customer readiness and other things that can push things out. But Adam had mentioned in Q4 we'll see a resumption of growth in both segments. If we're sort of assuming 3 launches, and that's about an implied $7 million ASP, I'm just trying to sort of dissect. Does that mean if we're back to sort of a 7.5 ASP for Q4 at 3 launches, that obviously gets us a higher revenue, but would we also, I guess, is it potential to see even more than 3 launches in Q4?
Yeah, Eric, it's Adam. So I think the way to look at that is, yeah, I mean, we are, as you pointed to my remarks at the end of my prepared statement, is we do see significant growth returning to the business as we exit the year. And it's not off of a small increase of ASP, quarter sequentially. So we expect to be able to launch significantly more in Q4 than we are in Q3. Whether that means you go from 3 launches to 4 launches, or from 3 launches to say 7 launches, I think that's kind of the range that we're kind of operating within, and that's really kind of guided by, again, kind of the customer readiness. We've done quite a bit of work looking into kind of where these slippages occur, and we can't. The slippages are always can driven by customer readiness, but in this case we didn't have. When we look at the manifest that we had coming into 2024. There hasn't been a mission on that manifest that we couldn't support from a production perspective. Any volatility we've seen versus kind of that manifest has all been kind of customer delay related. But as Pete said, that's part of the business and why people pay a significant premium to be on a dedicated small launcher versus being on a rideshare. So it's kind of uncomfortable in one respect, but also comforting in the other respect that people see value in that flexibility.
Gotcha. Thanks. That's helpful. And then maybe just we're seeing a step up in non-GAAP OpEx to 69 to 71 million, which we were around 58 in Q2. Is this sort of the right range as we should think about the back half of the year? I mean, we've gotten guidance to Q3, but just thinking in terms of the look through to Q4.
As we've said many times, these rocket programs are challenging on like lots of levels, including be able to predict the timing of when certain expenses are going to hit up, because you can make your commitments, at one point, and then you can face delays, or actually in some cases get things that pull into the left as well. So I'd say in general, I think that you should think about Neutron spending continuing to grow sequentially from Q3 into Q4. So that'll kind of drive overall OpEx in that same direction. But we're not looking at step function increases. It's more kind of kind of I would say on a relatively predictable slope of that curve. We would expect that spending would start to trail off as obviously as we start to approach the first launch of the vehicle, which we're talking about middle of next year. So I think we probably still have I'd say at least, I'd say 1/4 of kind of increased spend kind of velocity, and then perhaps it starts to kind of plateau and then trail off as we approach the first launch.
Great. Maybe if I could just add one more. It looks like you super successful test of a hot fire for the Archimedes. I mean, would you say that now this coincides with your timeline to get Neutron to the pad by mid-2025? I think, Peter, you had mentioned that that's still on track, but does this now give you a lot more comfort in that no earlier than mid-2025?
Yeah, Eric, it's certainly on the right side of the equation. Yep. So from here on in, there's more kind of testing to be done, but certainly our approach here was to put the flight engine on the stand and take it to full power, and that buys down just all of the risk really. So there's still obviously qualification of the engine to go, but certainly that gives us a lot of confidence to move forward.
Great. I'll sit back in the queue and congrats on the results and progress.
Our next question will come from the line of Kristine Liwag with Morgan Stanley. Please go ahead.
Hey, good afternoon, everyone. Peter and Adam, on the data and services initiative, can you provide more color and exactly what kind of capabilities and solutions you're providing, areas you're targeting, and maybe it's a little early, but any sort of indication of how you think about economics of what a mature, data and services capability could provide for you?
Yeah, hey Christine. So look, if you break up the industry, the launch is about a $10 billion TAM. Spacecraft or services is spacecraft is about a 20, and then launch service services from orbit is about a $320 billion TAM. So if you have the first two, then your ability to compete in the second one becomes incredibly strong. And I would say that we're not ready to talk about what particular applications that we're pursuing. Right now, we're focused on building capability to go after some applications that we find interesting. But clearly, getting into a $320 billion TAM where you think you can be pretty disruptive is a great place to be in. Where we've been anchoring for a long time. But like I say, it's too early to really provide too much color on where we're headed with that.
Great, thank you. I'll keep it to one.
Our next question will come from the line of Jason Gursky with Citi. Please go ahead. Jason, your line might be on mute.
Damn it, Jason.
Indeed it was. Sorry about that. Hello, everybody. Hey, Peter, just quick follow-up on that last one on the services side of it, the $320 billion TAM. Maybe you can just educate us on, kind of, I'll use a baseball analogy if you'll humor me, kind of what inning you're in on the development of that. What other capabilities do you need? And when do you expect kind of a unveiling of what you're up to there from a timing perspective?
Well, I'm going to horrify you, Jason, because I'm from New Zealand. I only know rugby, so a baseball analogy is lost on me completely. But I would say that you can. I think you can. You can look at the acquisitions, the kind of spacecraft we're building, and the scaling that we're doing to kind of bring some comfort in where we're trying to head with this. Like I say, it would be incorrect for me to really provide too much steering, but I mean it's clearly I've been very public in the fact that I think the large space companies of the future are the ones that are going to have the ability to build whatever spacecraft they need to build, the ability to launch them on demand and deploy constellations at cost. And if you have those things, then your ability to provide a service from space is uniquely advantaged compared to anybody else who doesn't have those things. So, right now I would say that we're really focused on building that capability, and you'll see Space Systems continue to grow and scale. Neutron is a really, really key part of this puzzle. I mean, we need multi-ton launch to deploy, significant constellations. So Neutron is probably, one of the most critical and key elements to that future.
Right. Okay. So from a timing perspective, that's helpful. And then on this point, though, government versus commercial customers, where do you think you're going to be spending your time on the services side?
A bit of both. So, we generally like sort of a 50-50% mix across the business, and you can see that pretty consistent across launch and Space Systems. But, there's huge opportunities on both sides of the ledger there, especially as the US government moves away from kind of singular large assets into orbit, into, distributed networks and low Earth orbit. So there's opportunity on both sides of the scale.
Mm-hmm. Okay. And then, Peter, can you just give us a revised view maybe on when you would expect to start signing up customers for Neutron? Is your thinking changed at all on when we start booking some?
Not really. I mean, if you bring a rocket that doesn't exist and you start selling contracts against it, they're always discounted contracts. And as I think I've said before, this is exactly what we did with Electron, and it took us years to flush those out. So, of all the things I worry about at night, demand is just not one of them. And I'd much rather bring a vehicle to the market and prove that it works and provide a capability to kind of unblock the kind of demand and monopoly than kind of preemptively sign a whole bunch of contract that I think we'd all regret later on.
Right. Okay. I've got one clarification and then one just for Adam. On the clarification, so the point you're trying to make here on Electron and the cadence of the schedule and the cash flow profile and the rev rec here is that you guys could have done all of these launches this year from a manufacturing perspective. You're getting the cash. There have been, and this is the part that I really want to confirm, there haven't been any cancellations. And so it's really just a question of when these things go, not if. Is that the point you're all trying to make here, just so that we all kind of understand all the moving pieces on the financial statements? Is the point you were trying to clarify?
That's 100% correct, Jason. Yep. No, we're collecting the cash on those, as the rocket comes down the production line and as milestones are met or time is met. It's just we don't get to recognize the revenue until we have intentional ignition.
Yeah. Okay. Got it. That's good. And then Adam, one for you. Any updated thoughts on when we get to cash flow break even on a sustainable basis?
Yeah, no, I think it still looks very much like it had before all along, really, we can't get to cash flow positivity on any sustained basis until we get the first Neutron off the pad. And so I've kind of been pointing people towards 2 quarters after the first Neutron launch is where I think, we kind of turn that corner on a more permanent basis, given where, the rest of the business is growing, kind of what the P&L starts to look like once you've got that first, R&D test launch off, and that you've got most of that infrastructure, put in place to scale Neutrons, which I think, we will have by, I would say, the, middle of next year. And that, again, middle of next year kind of represents kind of a minimum viable product and minimum viable infrastructure in this case. So there will be continued investment, but at a very, very different level. So I think my kind of guideposts are roughly 2 quarters after the first Neutron launch.
Okay, great. Thanks. I'll pass the line.
Our next question comes from the line of Cai von Rumohr with TD Cowen. Please go ahead.
Yes, thank you so much for taking the question. So, if you do 4 to 7 launches in the fourth quarter, you'll do 15 to 18 for the year with an initial manifest of 22. So you're slipping 20 to 30%. And it looks like quite a big slip in the third quarter. Can you is there any common reason? I mean, these are all customer slips, and was it the satellites aren't ready, or, is there any common thread you can describe?
Yeah, hey Kai. Yep, no, it's 100% customer readiness, and it's kind of the nature of the business. You know, a customer will request a launch date. Their spacecraft is generally not complete when they're requesting their launch date. It'll go through various tests, and sometimes there's rework, or you know, customers have other things that they're trying to line up. So, yep, that's 100% of the reason.
How do you think about your pricing? Because if you get 90% 3 months before, first of all, is that 3 months before the scheduled launch when you initially signed the contract? And then if you have to go 3 months, but they're slipping by 2 months, which looks like what's been happening, you're still collecting that last 10%. So any thoughts about, you know, they have the flexibility, but if they slip, you know, you get a penalty for slipping, because obviously it has to cost you more money.
Yeah, I mean, I would say that is one of the reasons, though, why we can charge a premium for the service. That's kind of baked into the premium for the service. And we do have some penalties in the contracts where we're kind of, certainly if egregious things happen, but also, you know, we have customers that, you know, 72% reoccurring customers. So you know, if a customer has an issue with a spacecraft, they're already upset. The last thing they want to do is be slapped with a penalty. And if you have a long-standing relationship with the customer, that's certainly not ideal either. And I guess that's what we're trying to you know, provide a little bit of color today. Is that is kind of the business model of a bespoke service like this. And while it's super frustrating for us, you know, this is the service that we provide. And you know, the good news is that, you know, as the rocket is coming down the production line, we're collecting the cash, and you know, the rocket is essentially funded as it's coming through the facility. But as to, you know, when the customer ultimately turns up and is ready to fly, it's just simply out of our control.
Terrific. Thank you very much.
Thanks, Kai.
Our next question comes from the line of Andre Madrid with BTIG. Please go ahead.
Adam, Peter, thank you for taking my question. I just wanted to ask for a status update on Solero. I know it's been kind of what's been dragging down the broader space systems portfolio, and we're not yet at that 30% gross margin point. Just some color as to what's going on there, when we might be able to see that.
Yeah, I can jump and take that one, Pete. So the Solero business actually. So yeah, you're correct, Andre, that we've been a little bit hamstrung by a legacy contract that was in place prior to us acquiring the business, and we're still working our way through that. I mean, there's still a little. I would say not a little. There's still a bit of the backlog that's representative of that, but it's becoming less and less in the mix. And so what we look at is, if we step back and say, you know, what's new business being signed up at? Is that being signed up at the target model or less or more? And you know, we could say we've on average now been kind of getting to a point where the 30-point margin target is really come into focus. So the business that we're signing up now, that those margins are very, very, I would say, much more assured to be at that target than they ever were before. I would say that you've probably seen the CHIPS and other state and local incentives that we've received to support that business, and that's going to do nothing but help improve those margins, even probably beyond that target, because of the fact that, you know, we're really replacing an aging reactor fleet of these in our solar fab. So I think everything is pointing in the right direction. I think we've made a lot of progress. I think, you know, it's just taking a matter of time to get that old contract flushed out through the mix, and it's happening. And what we're finding with that business is kind of meeting all of the strategic objectives that we'd set out when we acquired it, which was, you know, to provide that kind of much more higher degree of control over kind of delivering programs at cost and performance, because solar is such an important piece of the overall cost of a spacecraft that we really thought it was strategic to bring it in. And it's providing us with confidence not only that we can kind of deliver programs at a certain margin, but it also just confirms the fact that we can actually get the capacity that is sometimes very difficult to get unless you plan very, very far in advance. So all the different strategic kind of angles are coming into focus, and I think the gross margin one is also too. It's just going to take a little bit longer. We said, you know, our goal was to get there by within 2 years of closing the deal, which would have put that, back in Q1 of 2024, so earlier this year. So I'd say it's probably been delayed by a few quarters, but I would say not materially, and certainly the longer term kind of indicators all look very, very positive for that.
That's helpful, thank you. And then maybe just general color on PSC and Sinclair and ASI and some of the other businesses in the Space Systems group.
Yeah, I would say that, again, Pete talked about it earlier in his prepared remarks about our M&A strategy, and I would say that, our M&A strategy has worked out very, very well. I think, when you look at the components and subsystems parts of the portfolio, that's growing almost exactly kind of on our annual CAGR targets that we'd set out and communicated to folks, previously. So you want to think about that components and subsystems business with delivering roughly a 20% kind of CAGR. That's always what we'd kind of targeted, hopefully we'd get to, and that's really what that business has been delivering and continues to do so.
Super. Well, thank you, Adam.
Our next question comes from the line of Suji DeSilva with Roth Capital. Please go ahead.
Hi, Peter, Adam. Congratulations on the progress here. On Neutron, good to see the hot fire test success. I'm just wondering, as I look ahead to the first launch a year from now, I know it's not customer payload dependent, at least don't believe it is, your first launch, and it's largely in Rocket Lab's hands. I'm just want to know if there's any non-Rocket Lab dependencies, risks that might occur that would otherwise, prevent you from having the launch when you're ready to go, things like regulatory pad readiness. Just want to envision those as we get closer to that launch a year from now.
Yeah, hey Suji, great question. We've definitely front-footed a lot of that. I mean, I think a lot of us saw Electron sit on the pad at Wallops for a long time waiting AFTS certification and things like that. So, we certainly have all those kinds of things well in control. And, a lot of that groundwork was done, excuse me, a long time ago. Especially with some of the licensing around the launch pad at Wallops and things like that. So, no, we think we've got that in hand, and certainly there's nothing that's kind of out of bed at the moment. Suffice to say though, some of these regulatory timelines can drag on, but we have a lot of extended and experienced and relationships with the regulators. So. It's not untrodden ground for us.
Okay. Yeah, I guess the second go around is easier. And then also you mentioned ultra high accuracy launch capability in the press release. I'm just wondering, would you consider that a niche market opportunity, or incrementally is that a meaningful opportunity versus the traditional launches where you can get to that meter, I believe, distance?
Yeah. So initially we didn't think it would be, given that the industry standard is sort of 15 kilometers, it would be that important. Yeah, it wouldn't be that important to folks, but as we started to really accurately deploy, I guess it opened the aperture for missions that weren't possible before. A good example of that was the mission we did just recently for a Japanese customer, where they rendezvoused with a spent upper stage, and they were able to rendezvous directly off the rocket. So normally you would have required a big ball of Delta V to kind of come off the rocket and clean the orbit up. So I guess we've created a capability there that has really opened the aperture for a lot of other folks to do much more interesting things, including the DoD. And you can see, we even have a DoD rendezvous mission now. So it's definitely an emerging space. There's a lot more desire to do kind of these proximity operations and rendezvous operations. And once again, it's all just muscle building for future on Neutron as well. If we ever need to dock with anything in the future, we have all of that capability now created.
Great. All right, thanks, Peter.
Thanks.
Our next question will come from the line of Andre Shepard with Cantor Fitzgerald. Please go ahead.
Hey guys, thanks for taking our questions and congrats on the quarter. A lot of our questions have been asked, so I was wondering if you could touch on something from the Space Systems. I wonder if you guys have any updates on that $515 million SDA award. I know you touched on it earlier, so I was wondering how you expect revenue to ramp in the second half of 25, or if you could walk us through again, like how the financial impact of this contract is.
Yeah, I can take
Good one
that.
for you, Adam.
Yeah, I'll take that. So we're at the very, very, very beginning of that program execution. We've recognized, I think it's like maybe single-digit millions, maybe as high as $10 million of revenue under that contract, under the EAC methodology that gets applied under the accounting guidance. So I would say that, look, that's going to continue to ramp. We've got, each quarter going forward should be incrementally kind of constructive to driving revenue growth. And so I think you would expect that program to, I'd say, probably hit its maximum revenue contribution, probably not for another, I would say probably 6 or 8 quarters is probably the profiling. I think about how that growth curve, then it starts to kind of flatten out and then decline. And of course, it's all about kind of backfilling with the next contract or the other growth vector to kind of make sure you don't hit an air pocket. But right now we're in the very early stages. We still have significant revenue recognition off of the MDA Global Star contract, and then we're again just kind of not even scratched the surface of revenue contribution from the SDA program of $515 million.
Gotcha. Appreciate the color. And I guess switching gears a little bit, I know this was asked earlier, so I was wondering maybe what's a reasonable number of potential launches that you could expect for this year? Maybe how confident are you at, hitting 20 potentially, as I know you were aiming for 22 earlier. There's some shifts to the right. Just wanted to see if you could point us in the right direction there. Thank you.
Yeah, again, we've tried to be a bit more kind of nuanced about this because again, we always end up getting a bit surprised. We give people the best estimates that we have based on our knowledge of where they are in their program life and so forth, and it's very difficult to handicap, where launch is going to actually occur. But right now, it's looking like if you look at the model for Q3, we would have, we think, another opportunity for perhaps as many as 4 in Q4 to as many as 7. So that kind of gives you a range of somewhere between 15 and 18 launches for the year. There's really no upside beyond 18 is kind of, again, really I would advise nobody to kind of put that into their model at this point because that's a stretch. It's doable, but it's not a layup. And so if you think about like the delta between kind of the 22 and the 18, there is no customer readiness to support a launch beyond 18 for this year. So that's really kind of where things cap out. And again, that's if everything goes really perfectly, and things rarely, if ever, do.
Gotcha. Appreciate the caller. Thanks for taking our questions. I'll pass it on.
Our final question will come from the line of Anthony Valentini with Goldman Sachs. Please go ahead.
Hey guys, you got Anthony on for Noah tonight. Thanks for taking my question. I'm curious if you guys anticipate that you'll have to go back to the capital markets in order to fund some of these grander aspirations that you have.
Well, I think it really depends. I think what we have right now, we're in an enviable position of the amount of cash and liquidity that we have to fund the business. I think that can again fund some of our M&A ambitions. I think that it really is going to depend on kind of the size, the opportunity that comes into focus. I think that right now we don't really say, hey, look, let's not consider things that are outside of our current ability to finance, because I think, for the right opportunity, the capital markets, are available. Again, but it has to be for the right opportunity. But right now we don't see anything that would cause us to go back to capital markets.
Okay, that's helpful. And then in terms of the commentary, it sounds like really Neutron is, the enabler to you guys being able to do some of these things. Should we be thinking about that because of the fact that that'll be driving more cash flow that you can then, redeploy elsewhere, or more so of like the actual rails to getting to space?
I would say both, Anthony, for sure.
Okay, that's helpful. Thanks so much, guys.
Thank you.
That will conclude our question and answer session. I'll hand the call back to Peter Beck for any closing remarks.
Great, thanks very much. So before we close out today, I just wanted to draw your attention to some up-and-coming conferences we'll be attending. We look forward to sharing more exciting news and updates with you there. So that wraps up today's call. Once again, thank you very much, and we look forward to speaking with you again about the exciting progress that Rocket Lab has been making next quarter. Thanks.
That will conclude today's call. Thank you all for joining. You may now disconnect.
Wow.
Yeah. So what did you think?
I was surprised in some areas and let down in others. So I think you and I both, before the call, we even talked about the backlog, how that has yet to really show up in terms of, I mean, yes, they did have some additional signups for Electron and that, but there's a lot of good qualities, right? So I know I'm focusing on the negatives. Another thing that is a negative that I was kind of curious about was the large operating expenditures that they're expecting in Q3. So expect $80 to $82 million of GAAP operating expense, 69 to 71 million in non-GAAP, comparatively to where we're at this quarter. Sorry, I keep yawning, so I'm probably making you yawn. Like the mid 50s. So that's an increase, and I know that a lot of that has to do with Neutron, and they explain that, but it's just a lot. And my hope is that really you just observe that in the third and fourth quarter, and that really after that, it's about just getting it on the pad. And there's not much really other than final logistics and testing that really would cause you to have so much operating expenditures within the first half of the year. But that might be me being naive. The thing that was most exciting, which I've heard now multiple times over the past, say, 2 to 3 quarters from Adam, was the place of cash flow break even, and really getting to that place after a lot of the initial operating expenditures come through for Neutron, but really then I think having that lagging effect of actually starting to intake a lot of cash for Neutron and the potential future commercial launches that they have for that. What else was there that really the hot fire test obviously got everyone fired up. The market obviously like that piece. We spiked up to close to $5.50 after hours. We've now retraced a little bit when Adam kind of took over and started deflating with people with a little bit of OPEX and stuff like that. Coming back to reality, right? Everyone, when Peter was talking, they were seeing the future. They were seeing Neutron going up into the air. And then you had Adam kind of being like, well, this is going to cost money, unfortunately. And, but I think a huge, huge piece that I'll end on, that I'm really curious to hear your thoughts. A lot of people are still being like, well, Rocket Lab doesn't have that umph to really get you across the line. It's like, well, I get that. But if you think about what Adam just said, right? If Neutron stays on target for mid next year, we are within 12 months of a Neutron launch. That's number one. And then two, we are now 18 months within being basically cash flow break even. And on the third piece of that, we still have $540 million of cash on the balance sheet. And they iterated that at the moment, even with their acquisition ambitions for 1 or 2 additional companies at this point, they don't foresee having to go back to the capital markets. And I think that that's important. That's not to say they will never do it, but with the thoughts that they have, the small bolt-on acquisitions, it's not to say that a Relativity goes completely belly up. It's not to say that what's another one? Firefly goes completely belly up, and they might have to go back to capital markets. But with what they're planning on for the time being, with how the environment looks right now, they seem like they're in a good place. And the nice thing to me is that we have $500 million in cash plus right now, and we're going into a decreasing rate environment. So even if we need to do a capital raise, I don't think that we would do it in the same manner that we did in the first quarter, which is basically giving up, 8 to 10% of the share count and, having to do that covered or the capped call transaction, etc. We probably at that point within the next year or so have sufficient line of sight as to what the future cash flows look like, with Solero becoming more gross margin positive, etc. That in Neutron, a lot of that OPEX being out of the way, etc., that we could take on traditional debt as an organization and operate like a normal Johnson & Johnson or Apple or whomever that normally takes on normal debt. And so I feel confident with where we're at today that the hot engine fire test being behind us. It's just a good time. So anyway, sorry, I'll stop talking, and I'm curious to hear your thoughts.
I mean, overall, I'm very pleased with how they changed communication about the company. I kind of felt like, oh my God, what are we going to do content about? Because they're being so transparent with everything that they're going through and all the contracts that they have. And I even had this thought, like our interview with Peter Beck, we really have to think of good questions now, because even the analysts stepped up somehow. Like they were not asking stupid questions like, are you a dual citizen, or what is your favorite color? It was actually good questions by the analysts. Also, yeah, I also picked up what you said, that he, like, basically when Adam Spice says that us going back to the capital market depends on the acquisitions and how big the acquisitions are going to be and the opportunities, it tells me that they have not chosen the company yet, right? Like they're basically saying that if we're getting a 50 million acquisition, then we have 250 million left. But if the acquisition is 300 million, then we have nothing left. And then that's a very interesting point. And both because I think that question was also for the future plans, meaning the space service. And the fact that when he says that we don't know and the capital markets are open for the right opportunity, it also tells me that they haven't chosen. It's not also that they're not sharing with us, what their space infrastructure is going to be. It's like they themselves don't know it yet. They're probably have narrowed it down to like maybe this, or maybe this few options look good, but I don't think that they have chosen yet what it is. One thing that I was a bit surprised by is when he was asked about the Neutron demand and when they're going to sign contracts. He was very confident about the demand, which is good, but it almost sounded like that they're going to get the vehicle on the pad and fly it before they will really start getting contracts. And I was like, ooh, I don't know if that's good. Like, I mean, it's good for the people who want to still accumulate Rocket Lab shares, but I was kind of hoping to see Neutron contracts quite soon.
Yeah, that's a little bit ambiguous as well. To me, I don't think, as a shareholder, it doesn't really matter to me. I mean, I think regardless, I have a feeling that the demand is going to be great no matter what. And I think what I think Peter doesn't want to do is he wants to keep up his reputation of always being ready. And he wants to ensure that, by the time he gets to a place where, incomparable to the Electron, right? When he gets to a place where he feels comfortable that he has a system down and he's ready to launch it into space, that he doesn't have to, unfortunately, let a customer down. And he also wants to make sure that the Neutron is ready when the customer is ready. I think he's been able to keep up this reputation of, we're ready when you are. And he can say that in the presentations and it looks nice. Nobody else can really say that, maybe except for SpaceX. So if you think about it in that perspective, to me, it's okay. And to me, I think he's right. If you were to sell it now, then they'd be like, well, you don't have a launch ready vehicle. And so we want to sign up for 5. They'll try to get 5 launches for 150 million. Yeah. And so you're getting 30 minutes. So that at that point, now you're starting off at 30 million versus if you have something like that works and you have the $500 million to get it across the line, to me, I'm the same way. Like when, for example, some people are about, like, they get scared. They're like, oh my God, like we spent all this money and we want to make sure that we're getting this. Like, if you think about it, why would you charge a 10th? Like, if you could charge a 10th of the price for it, say they spent $300 million to get this thing on the pad and they're now only going to charge 30 million, doesn't really get my socks off, right? But if they were to say, look, we got this great product, we're coming out of the gate 65 million. If you think about it, I mean, if you have a 40% gross margin, eventually you're paying your investment off like in a very quick manner. So to me, it's like I'd rather wait. And I feel like although it might be a difference of 3 to 6 months, it'll at least it'll make you come out of the gate way stronger. And I'm curious. I mean, maybe we'll learn something. Maybe Peter's got this experience, right? He's been doing it since 2006. Maybe you're 100% right, Vince. Maybe when we'll be like, oh shit, now I get it. Maybe New Glenn gets on the pad in December, blows the fuck up. I'm serious. And then what does that mean? What does that mean? That means they've destroyed 2 multi-million-dollar satellites that now Rocket Lab has to rebuild. They have to now reschedule 2 years later for New Glenn to be able to get these things to go to Mars. And what does that do? That pushes back New Glenn, I'm sure, in terms of like notoriety and you know what I mean? Like granted, the exact opposite could happen, right? They could go to Mars day one and do great, right? Obviously,
what I think is going to happen. I think they will miss the orbit in Mars.
The time?
That I think.
Oh, you mean miss the orbit, or you miss the timing?
Yeah, like because Falcon Heavy, right? When they launched Elon Musk cherry red Tesla, and how many rockets have they launched, right? But it was the first time that they were launching like interplanetary, and everything went fine except that I think that the final engine burn was like 2 seconds too long or something like this, and then they overshot the orbit. Like they had no way of slowing down. But maybe these satellites can course correct. So I don't know. Maybe I'm not a space engineer. I'm just saying that if SpaceX, after having launched, I don't know, like 50 Falcon 9s, could not get the orbit correctly on Mars, then I'm really having doubts that there hasn't been any rocket, any commercial developed rocket that has worked on the first launch, like not even Rocket Lab. And this is like not just any launch. It's like a very, 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 very complicated launch.
Yeah. I'm trying to remember if Falcon 9, was that a success the first time? Or did that blow up on the pad? I thought Falcon 9 did well. It's not a very good. I'll double check, but I'm with you. I mean, I know when they were framing Wild Space that was definitely what they talked about. Like nobody really had ever was successful and get to orbit on the first try. But I don't know if Falcon 9 did or not. Let's see. Did Falcon 9 get to orbit?
We got a super chat question. I just want to answer it really quick. Very surprised nobody on the call asked about Q2 revenue projection below Q2 revenue. Probably not a great sign for the stock short term. The truth is that it's really weird because the reason why revenue is down is because there is 3 launches and not 4 launches. And as they presented, they are getting in the money. So it's more like a bookkeeping thing because they are getting in the cash flow for having sold all those rockets, but the customers are not ready for the launch. And I think that this is why people were not asking about it. And the space systems revenue is going to be higher than last quarter. And overall, you are having a revenue growth statistic. So I think this is why it's not such, I don't think it's a big deal. I don't know what you think about it, Matt.
I agree. I think they've been guiding for 3 launches in Q3, and it's not like, I think we've always known that Q3 was going to be rather flat. That's just my interpretation. I think the big piece of really where we're going to get to in terms of the increase in revenue going from $400 million this year to closer to $600 million next year is potentially 1 commercial launch for Neutron in the second half of the year, and then 2, a slight increase in the cadence of Electron. And so I think you'll see a slight 20%, 30% growth year over year for space systems, but the rest of it's going to be driven by the new Neutron launch and then a commercial one, right? So the second or third launch, whatever one is commercial, and the increased cadence in Electron, hopefully. So hopefully we have more folks, and I think we're going to have a lot more HASTE, I think, next year. And so I feel like HASTE is really going to be the place where we pivot, because HASTE, it seems like there's a lot more work with less need for like satellite readiness and things of the like. Really, it's just like the hypersonic aspect of the rocket that I feel like is the key long lead for that. And we know that Rocket Lab can supply that. So to me, I think that really you're not going to see an increase in what we currently have in our remit, meaning the Electron, HASTE, and space systems business, until you see a large uptick in revenue coming from Neutron. And to me, I think Neutron's going to be the large driver going kind of forward. And once that happens, that's when we'll get into the idea of what is the constellation that we're going to be providing, that Neutron will be launching, and that will be the real revenue driver, hopefully. And that'll be nice, because not only then will you have the space systems revenue and then the launch revenue, but you'll have exactly what SpaceX has right now, which is the Starlink revenue, or equivalent for us here at Rocket Lab, which is, I don't know what they're going to call it, whatever the constellation is. But my hope is that it provides that constant revenue stream that you can consistently rely on. And that will be, our ability to build our own backlog. And that would be nice. But I'm so curious to see what that constellation is.
Yeah.
Did I answer your question? I feel like I danced around it. I think
you're asking me.
Yeah, I'm trying to remember if I answered your question or if I danced around it.
Yeah, I think you gave a good answer.
Yeah. I'm looking for the success rate of Falcon 9. I can't see if it.
Why is Dave G not invited to this party? I think some people like to do their own streams. I think he has been doing the streams even before I started doing it. So we do collaborate on a lot of things, but he likes to do his own earnings stream. There's nothing wrong with that.
Yeah, no, Dave, we have a really good working relationship. Dave's a really smart guy. We'll be collaborating more in the future as well.
He's collecting wedding money, exactly.
Yeah, exactly. He's trying to get as much super chats as he can. So he can go on. He can upgrade from Jamaica to the Maldives or something.
Could you imagine what his wedding is like if it's only based on YouTube income?
He'll be going to the courthouse and
and
having cake from his own oven. No, Dave actually does a good job. He does actually pretty well with the revenue side. So it'd be better than my wedding. I think I get like $100 a month from YouTube. So, but yeah, no, Dave does a good job, and he also covers a lot more things than I do from a space perspective. I mean, he covers more about like Redwire and some of the other space companies that I have no interest. I mean, other than me dabbling potentially in Black Sky and Planet Lab, I have no real further interest in deepening into space other than Rocket Lab. I think Rocket Lab is going to be the big winner. So anyway, Dave's a great guy. Yeah, he's got sponsors. He doesn't need us. Yeah. I saw some of his sponsors.
Yeah. I've been asked by a few companies but I haven't. I don't know. I think some was scams, and one of them was this brokerage or a brokerage company, but I don't know. It wasn't like a sponsorship. It would have been like an affiliate link, and I just don't feel comfortable with it. But yeah,
I've tried, man, and I think the only one that I really like, and I don't really even get sponsorship payments from anymore, is really the Seeking Alpha. Like, I really enjoy that side. It's a completely different audience, and so I get paid through writing articles for them, and at the end of the day, it's just a different audience, and I have gotten good feedback from that, and I'll probably continue to do that. But everything else, man, I mean, to me, it's just not worth it unless you have a grand scale, and I don't do this full time.
Yeah.
So
I think what's interesting with us is that when we pick the right stocks, like it pays us 1 million times more than YouTube ever could. And I think that that's what makes this content so special, because I research the stocks for myself, but I'm like, if I wouldn't be doing the channel or wouldn't be doing YouTube, I wouldn't be researching it as much, you know? And I feel that it's like a win-win, because, you know, I research more, I share more with the audience, and then I'm, you know, more confident in going balls deep into Rocket Lab, for example. And when I'm right on it, then it's like, yeah, like if Rocket Lab would 5x, like there's no way that YouTube or anything could pay me that much. Yeah.
So I am going to write a poll. What did you think of Rocket Lab earnings? And I'm going to do bullish, neutral, and I'm going to do bearish as well. And we'll let that run a little bit in the background. But I know we're going to be collaborating a lot between now and probably the rest of the night, although it's getting pretty late for you. But how many hours? Because I know you and I have to collaborate on some questions.
Yeah.
How much time do you have between now and then? When are you going to bed?
I should have gone to bed. Let me see, about an hour ago.
About an hour ago. So when do you want to collaborate on questions then? For the interview?
I mean, I think if we end the stream soon, and then we can just stay on.
Very good.
Yeah, I had some final thoughts on the call, because I think that the quarter went really, really well. The thesis is really intact, and whether people like it or not, I think that the big rise in the stock price, when we will go to like the 8s and 10s and 15s, maybe, I think is going to come from Neutron contracts, and when we're more close, like probably like for sure after the first Neutron flight and Neutron contracts, because it just takes out so much risk from the company, and, you know, cash flow positivity will be, you know, so close, and I do think that we're going to go up from here. Like the direction of the stock is up. It's not that I'm it's not that I'm not bullish. So I think that we are going to go up, but I think that the 10s and 15s, that will be next year.
Yeah, my price target is still 15 for the end of next year. I need to relook at some of the data. It might have back then, though, when I wrote that article, it was like February-ish. Neutron was still scheduled for the end of 24. And so I might need to adjust my price target based off of that, but I haven't given it much thought. I mean, I know within the next 24 months we'll be at $15 a share, and that's kind of what I've been going by. And it's always been related to kind of that, when's cash flow break even and when's Neutron kind of there. But everything's kind of pushed, at least for now, by 6 months based off of that Neutron piece. And so I was thinking by the second half of 25, you know, we would already be into that place of cash flow break even, because we had already had Neutron launched. But now that Neutron's in the middle of next year, it might push things back. So I don't know. I'd still be rather confident that once we get a Neutron in the air, and if it's successful, which, knock on wood, when it's successful, I should say, that'd be a huge lift in the price. Because you think about it, we're at 400 million a year right now. One launch is 12.5% of that. Let's just say 50 million, or if it's yeah.
But I think it's mostly Wall Street logic, because if like I think that the fair value of Rocket Lab today is, let's say, $8 to $10. If you, how do you call it? If you don't account for any bankruptcy risk, or, you know, like cost overruns on Neutron, and, you know, these things. So like, I understand that for the stock to go to 15, you probably need more than retail to be buying the stock. Like, you probably need Wall Street to be buying the stock. And the only way that they're going to do it is if they can put it in their little charts that the Neutron development was 300 million. You know, it flew on this date. We have these contracts, and us, like, this is where the retail can, like, the retail investing is riskier, but you can make a lot more money because, you know, we can have Starship on Twitter go out to the, you know, the site and take pictures and send it in the group chat and show, like, guys, they are really doing good, you know. So we can presuppose that these things are happening, and in our own calculations we can give them the benefit of the doubt. But Wall Street doesn't think like that. They have to see it. It has to be documented. It has to be concrete, and that time is coming, but the time is not now. But I am zero worried about the stock. Like, if I look at, like, when I first invested in them, which was more than a year ago, since then I think a lot of risk has been, I mean, just this hot fire has taken a crap ton of risk out of the picture, and it's really a sleep well at night stock for me, because, but they still have more to do before they become like a Palantir, or they are way earlier.
Yeah, I'm really curious to see what the next big announcement is, and what the constellation is, and what the revenue projections might look like for that. So that'll be fun. Cool. All right, man. Let's get cracking on these questions. It'll be fun. I have to double check I missed 3 or 4 of the analyst questions, but I got the majority of them written down, so we don't double dip. So hopefully it'll be fun. So thank you all for joining. I think there's like 300. There was like a 300 steady on your channel, Vince, and there was about 100 steady on mine up until the earnings call started dragging on. So much appreciated. We will be interviewing Peter, and then hopefully within 24 to 48 hours after that, we'll be able to get it up and running. We have to coordinate between me and Vince and maybe others. And then what's the other piece? Hopefully we get good news on the launch window this weekend, because maybe we could couple Rocket Lab Weekly with the launch. We'll see. I don't know when the launch is for you, but I think it would be in the evening time, because it's like 7 a.m. I think 8 a.m. at New Zealand time, I think.
Yeah. I think it's 12 hours for me, so it would be like 7 in the evening. Yeah.
So might have to delay it a little bit if that's possible. So we'll see. We'll keep our ears to the street.
Cool, guys. And all of you who are watching on my channel, please go and follow Matt. He's an amazing guy.
Thank you.
His channel is in the description box below. And
everyone do the same. The 60 out of you, if you haven't already, please do the same events. He's in the chat or the description below as well. Cool. All right, my friend. I'll see you in a sec behind the scenes. Cheers all.